And what is up everyone, Andrew here, and in today's video we're going to be taking a look at Starbucks and what I think about the company after its recent 10 to 15% dip that I just took. So let's start off by taking a look at Starbucks on the chart here. This is going to be a 1 week chart, and we can see that if you chart this out here, this could be an upward channel here. We have seen that Starbucks has tested the bottom of this support line numerous times now, and for the first time in about 5 years, it has come down off of this big run up here, a bit of a consolidation here. It now broke through to the downside of the consolidation, and we barely touched the upward support line right here. So is there a chance that it bounces off of this and that this support line remains a strong support line for Starbucks? Yes, there is. A few things that worry me though, like we can see that on the run up here from 2014 to late 2015, there wasn't a lot of support testing. It just had a huge run up right here, and it went into a big consolidation phase here, and that's fine too. And we can see that it hit the support line once, twice, 3, 4 times here on this $52.75 mark, but this time we broke right through it. So that is something to be concerned about. We could see that we might be going into a downtrend here in the blue lines that I marked. And lastly, this is the weekly chart. We have also printed a bit of a bearish divergence, and that could foreshadow some more bearish trends on a long time scale as well too. So Starbucks is definitely oversold here. We can see that it has not reached this level of oversold in quite a long time here, sitting around 26. It's hard to know that whether or not this support line right here will hold though, due to the fact that this level itself never had any established supports on this run up here, as I previously mentioned. I've seen some people give this $34 mark as an end goal target point, but I think that's just that's way too severe. And I think a more likely play out, if we do continue further down, would probably be, well, first a more reasonable support line would be this $41 line right here. That's a lot more reasonable than 34. So if we do see further downside, that could be one of the target points. However, I really think that we could see some holding. I'm not gonna draw a line for this. It's just gonna be right around here, from 49 to about 47.50. Right about that. So this area, and you can take this circle and move it around however you want. So just this area right here could be a bounce target in my opinion. I don't think we're gonna see prices this low. And I'm gonna go into some of the fundamentals and some financial numbers to explain why. So let's go over a few numbers right here that Starbucks has. PE ratio of 16.27, that's all right. Forward PE ratio of 18.54, that is an all right number on its own. However, seeing a forward PE be higher than the PE is usually not a good sign. And we can see that market cap wise, Starbucks has a $71 billion market cap, so it is a large valuation right there. Price to earnings growth is actually fair, so that's good. Price to sales, that's all fine, but price to book is really high, and we can also see that Starbucks does carry a bit of debt, a 1.39 debt to equity ratio, and that's not very good, especially if the economy takes a downturn. I'm going to take a look at some of their competitors here. One of them is Dunkin' Donuts. They don't have a stat on the debt to equity there, though, so I believe it could mean that Dunkin' Donuts doesn't have debt. They have more cash than debt. That is a possibility. And we can see that Dunkin' Donuts has performed very well right here compared to Starbucks in the last year. It's up 25% year to date. No, it's up 25% in the last year and 8% year to date. Dunkin' Donuts is going to be one of the main competitors to look at for Starbucks, and we can see that they have a very similar 2% dividend ratio. Dunkin' Donuts' numbers are higher here at 30. Forward PE is substantially less than the current PE. So they are growing in that respect. And also, Dunkin' Donut only commands a $6 billion market cap, which means it's more than 10 times smaller than Starbucks. Lastly, their EPS growth is very similar to Starbucks if you take a look here too. Very similar EPS growths. And they both have earnings coming up in about a month on the same day. So that's something to watch out for. So another competitor to look at for Starbucks is McDonald's. And McDonald's is obviously a little bit different in the sense that they command so much of the fast food area, and Starbucks is mostly just their coffee. Yes, Starbucks offers food, but they're not as known for that in that respect. Some things that McDonald's has going for them: forward PE again is less than the PE ratio, not that much less. And the forward PEs, it is fair to mention that the forward PE of both Dunkin' Donuts and McDonald's is still higher than the forward PE of Starbucks, so they are more expensive in that regard. McDonald's is also 2.55 on the PEG, which makes it quite expensive for growth, and we can see that the earnings per share is a little bit less than Dunkin' and Starbucks. However, the dividend right here is a little bit more than Dunkin' and Starbucks, so they have that. Lastly, McDonald's has a bit of a weak technical setup too, just like Starbucks. Starbucks, this is a bad technical setup. McDonald's, this is a rising wedge here, just real quick. So that could lead to a bit of a downside too. But that, when McDonald's falls down out of this upward wedge, that could be a dip that you might want to buy. So that's going to be going on a tangent here. So let's get back to Starbucks. So the big reason for this huge drop recently in Starbucks is the fact that some analysts took a look at their Chinese growth, and they said that Chinese growth in their same store sales revenue is going to be flat year over year, and that is something that is not good, and that caused a big sell-off here. And we can also see that there's a lot of downgrades here recently, 3 from Morgan Stanley especially. That is something big. Something to note here is that there's nothing bearish here. These are all just hold ratings: market perform, equal rate, market perform, neutral. Those are all just neutral ratings, but that is enough to cause a sell-off. So China is the big thing that Starbucks and a lot of Starbucks' investors have been banking on. Starbucks has been trying to grow into the China scene, and China is a huge market. So if you are able to capture Chinese market share, that can give you a lot of revenue. However, the question is whether or not you can. And Starbucks, according to analysts, Starbucks does seem to be struggling a bit in that respect. And putting a bit of my own analysis into that, China, first of all, and a lot of the other Asian countries, is more into tea, I would argue, than coffee. And yes, Starbucks does offer tea as well, but Starbucks tea is definitely a second afterthought compared to their coffee. There's that. Also, Starbucks is a more expensive coffee option, and while a lot of Chinese middle class consumers that Chinese middle class is booming, a lot of the Chinese middle class might not have forgotten what it's like, I'm gonna say, to be poor. And in that respect, they're a lot less likely to splurge on something like coffee than splurge on something that makes a more noticeable and obviously impactful thing on their life, such as technology. What I'm saying here is that I think Starbucks has other competitors in China that offer coffee at a substantially lower price while still being just as good coffee. And I think that's one of the things that is stifling Starbucks' growth into China. So what are my final thoughts on Starbucks here? Do we buy this dip right here? Do we trust this rising support line here to be able to bounce off and go towards higher prices? Maybe even get rejected by this downward trending line right here, but that's still a decent swing trade. I'm going to say, like many of the analysts right now, I am neutral. I don't think buying this is not going to be a terrible buy, but I do think that there's possibly better places to put your money right now. As always, Starbucks has been a bit of a trend, we can see, and if the trend of Starbucks falls down and falls apart, that could be an expensive loss that we could be looking at if we were to buy this dip. I think that with everything in mind, it is better to hold off on this dip and to wait for possibly lower prices. However, that is just something that I'll be doing. I would love to know your guys' comments as well. What do you think about this dip on Starbucks? Are the analysts' fears of a flat year in China overstated? So that is going to do it for me. Thank you all so much for watching this video. If you liked it, please be sure to give a thumbs up. If you have any questions or comments, leave that in the comment section down below. And as always, if you want to see more videos just like this one, be sure to subscribe to get notified as soon as I post it. So, thank you all so much for watching. My name is Andrew Young, and I will see you all in the next video.